So when you apply for a loan, doesn't matter if it's going to be an owner-occupied loan or an investment loan, the loan term is always going to be 30 years. But do you actually need 30 years to pay it off? Well, guess what? You don't need 30 years to pay off your home loan. If you're setting a dream of rent investing and buying multiple investments, well, an investment loan is 30-year loan term as well. So there's no difference in getting a home loan for an owner-occupied because they're both going to be 30-year loan term. So the following is ways to reduce your home loan and pay it off faster than 30 years. Good day everyone, I'm your host Tony Xia and thanks for joining me on another episode of the Mortgage Chat. Today, let's talk about, do you really need 30 years to pay off your home loan? So when you apply for a loan, doesn't matter if it's going to be an owner-occupied loan or an investment loan, the loan term is always going to be 30 years. But do you actually need 30 years to pay it off? And the answer is no. And the reason why I want to do this video today is because you got these buyer's agents, these rent investing experts, or these people that's trying to sell you their dream of rent investing always say shit like, do you really want a home loan and pay it off in 30 years? Well, guess what? You don't need 30 years to pay off your home loan. If you're setting a dream of rent investing and buying multiple investments, well, an investment loan is 30-year loan term as well. So there's no difference in getting a home loan for an owner-occupier because they're both going to be 30-year loan term. The only reason that a home loan will take 30 years to pay off is if you pay the bare minimal repayments. So as an example, if your home loan repayment is $2,500 every month, and you don't pay extra into the loan or you don't put extra into the offset account, yes, your home loan, it will take 30 years to pay off. So the following is ways to reduce your home loan and pay it off faster than 30 years. So the first way to pay off your home loan faster is putting extra money into your redraw or putting extra money into your offset account. Okay, so what I mean by that is your home loan will either have a redraw facility or an offset facility, right? Or both, whatever you want to call it, okay? So if you put extra money into your home loan, you'll pay your loan down a lot faster. Or if you put money into your offset account, which offsets your loan where you're paying less interest, pay more principal, therefore your home loan will actually get paid down a lot more faster as well. So as an example, let's just say your home loan right now is 800 grand at 6% paying P&I repayments. Now, if you throw in an extra $300 per month into your loan or into the offset account, that could potentially save you around 150 grand in interest over the term of the loan and also shave your home loan term by around 30 years down to around 26 years just by paying an extra $300 per month into the loan or into the offset account. So the second option is if you have car loans or personal loans or even credit cards, which the interest rate on those are quite high at times. Now, if your average interest rate on any of those is around 10%, you can actually consolidate those loans into your home loan, right? So as an example, if your total debt of these, call it bad debts, let's say around $60,000, you got a car loan, personal loan, credit card, etc., and you're paying an average of 10% every year. So the repayment on those debt at 10% over 7 years is around $997 per month. Now, if you consolidate that into your home loan at around 6%, your total repayment is around $877 over a 7-year period at 6% P&I. So there's a savings of around $120 per month just by doing that, which could be used as an extra repayment into your home loan or into your offset account, which, like I said to you, will reduce the interest paid over the time. And last but not least is investing, right? So you got two ways to look at this. You can either invest in stocks or you can invest in property. Okay, so let's touch a bit on stocks, right? So let's say you invested stocks in the Australian market or the US market where, for example, you purchased a property, you purchased a stock at $10 per share, and over a long period of 10 to 15 years, that $10 per share jumps to $20, $25 per share. You can actually sell it, pay your capital gains or taxes, whatever you want to call it, use the profits to pay down your home loan. So I'm not a financial advisor. I can't tell you the logistics exactly how that stuff works. You should talk to a financial advisor if you want to invest in stocks or an accountant in regards to taxations, okay? So the second part to investing is buying investment properties, right? So especially the last few years where Australian property market, house prices actually grew substantially, right? So, call it Queensland, WA, South Australia. The prices on those over the last 2-3 years probably grew an average of around 10 to 15% depending on which state you want to go to, right? So let's just think of it long term, okay? Imagine if you purchased a property today and you kept it for the next 10, 15 years. Just think of how much it will grow in the next 10, 15 time frame where, you know what, I'm going to sell it at a big profit. I'm going to pay my taxes. That allows me to pay off my owner-occupied loan a lot faster. That's what I did. And that's what my video up here will show you. Okay. So that's why a lot of people invest in the Australian property market, because they see that long-term growth that allows them to sell it off for big profit when the time is needed to pay off the owner-occupied property, or sell it off as part of their retirement funding where they can use that money to live off when they retire. But if you don't know where to invest, or you're investing in another state, for example, you're from Sydney, you're a first-time investor, and you can't invest in Sydney because it's just so damn expensive, you want to invest in other states, it's always very important to engage in a professional, call it a buyer's agent that specializes in that area, or you have the tools to do the research yourself, because the last thing you want to buy is a dud asset that doesn't grow. So everyone, that's just a quick guide in telling you and showing you to potentially how to pay off your home loan in less than 30 years, instead of listening to those rent investors or those buyer's agents out there that's deterring people from not buying an owner-occupied property, because they're telling you, why do you want a 30-year loan term when you can get an investment? Well, like I said to you, doesn't matter if it's going to be an owner-occupied home loan or investment loan, it's all going to be a 30-year loan term, okay? Those are the ways in how to reduce that loan term from 30 years down to X amount of years, depending on how fast you can pay it off and how much you can contribute and how well you invest in other assets to pay off that property. As always, thanks for joining me in another episode of The Mortgage Chat. Please give this video a like, give this channel a follow, and I hope to see you on the next episode of The Mortgage Chat. Have a great day.